Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Sebastian, Chief Operating Officer over Option Pit. He's here to discuss market reactions to geopolitical events. Mark, it's great to see you as always. Welcome back to Trade Talks. And I want to get your thoughts around how markets typically act from a volatility perspective when we have heightened geopolitical events such as we witnessed over the weekend. And I think it's also important to note that the bond market is closed today as well. So, I wonder if that changes the liquidity situation, but how did volatility markets react? Are you surprised? Are they in line with historical geopolitical events?
Well, as you'd expect, initially you typically see a big pop in volatility, a big pop in fear. But then as cooler heads prevail, you generally see markets kind of move past a lot of geopolitical events. There have been many of these that in the last several years where initially the market sells off big, and then after that we would kind of resume our normal progression. I'm thinking about things like, North Korea firing off a missile. I remember that markets tanked and then ended up on the day. Donald Trump, when he was president, he would say something or tweet something, markets react, and then eventually move right back to normal. Coming out of the action on Friday the 6th, it had kind of broken out of this bearish profile that we're in, and we're kind of set to have a bull day. And frankly, if not for the event over the weekend, I think markets might be up more. But what you'll see is you'll get this initial pop in volatility, bonds get bought, and then eventually things kind of normalize. The one area where we're going to continue to see some volatility, continue to see some price action is in oil markets because of what happened directly affects how oil markets move.
Yeah, well, it's interesting. I was thinking about its relevance to what we saw when 9/11 happened, but we didn't have social media and the news just didn't travel as fast as it does now. And I wonder, I'm sure there's a great historical academic study that can be done on this, but the impact of the rate at which news moves now and how the markets react or how they're impacted by that.
Yeah, 9/11, it'd been interesting to see if we would have gotten the same type of selling and vol pop nowadays, relative to what happened about then. I still think it would have been a much bigger event. You and I were both there. You and I remember, not being able to go to work and the New York Stock Exchange closing for an unprecedented period of time. So it was a little bit different. This is markets showing you that, despite what happens in geopolitics, they remain liquid, they remain open, they remain able to trade. Frankly, it's probably good. It's a bank holiday, bond market's closed, but it's probably a good thing the stock market's open to show you that, markets continue to act normally and continue to persevere through this.
Yeah, Mark, and I think that's a great point that you made. And even more recently, as we were going through, the initial shutdowns with COVID and the volume of trading, the volatility that we saw, how, the capital markets there, the infrastructure was so resilient. And it was a great test for that. Removing that, when we talk from a seasonality perspective, what do you expect for Q4?
I think near term, we're due for a little bit of a bounce that we're seeing right now. I think that earnings season could be tough. It's going to be very interesting, but the positioning I'm seeing in options kind of across the board is very bullish in December. A lot of the paper is looking for a Santa Claus rally. So I'm looking for potentially between now and Halloween, maybe into Thanksgiving, we could continue to see the VIX oscillate, move between 14, 15 on the low end, 16. It's tried to threaten 20 of the last couple times. Vol Q, very similar behavior. If you look at the moves that it's been making, it got as high at, Vol Q got as high as, one second here. That's what I was looking for. Vol Q got as high as 22, back down to about 20. I think that if you look at the pattern, we could see Vol Q make a run at 25, 30, especially if Apple doesn't break out of the pattern that it's in. A lot of the mega caps, the names that really held the triple Q higher, have seen some volatility and have seen some selling. That's lended Vol Q to rally. If these names can break back into a bullish trend, then we could see vol Q pull back. Positioning is saying that is going to happen in December, maybe not right here in the immediate. Like I said, we could see a 1 or 2 day rally, maybe a week, but I still think there's some downside pressure for the QQQ and some upside movement ahead of us in vol Q as we head into earnings, because I think there's going to be some fear ahead of those earnings reports.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.